Friends, the crypto market is going through one of the deepest crises of the year. People are scared, uncertain, and everyone is asking the same question. Is this the final dip, or is the real storm still ahead? In this video, we won't just repeat headlines, we will uncover the truth. Because what's happening right now is not just a correction. It's the moment that will define the next 6 months of crypto. The recent crash in Bitcoin, Ethereum, and major altcoins has shaken the entire landscape. Bitcoin, after months of a powerful rally, suddenly dropped 18 to 22%. Ethereum broke multiple key support zones. And meme coins, especially PEPE, were crushed under liquidity dry-ups, whales selling, and leverage-based liquidations. The market today stands at a crossroads. From here, the next 6 months can either push us towards new all-time highs or deeper into another phase of correction. And that's exactly why this conversation matters now. Your investment, your safety, your next move, everything depends on understanding the full picture. To understand this fall, we first need to see what's happening globally. The U.S. economy recently released data that surprised the market. Inflation ticked higher again. The Federal Reserve delayed expectations of interest rate cuts. The dollar index strengthened sharply. These 3 factors always hit risk on markets first, and crypto absorbs the shock more violently than any other asset. On top of that, institutional inflows into Bitcoin ETFs slowed down in the last 2 weeks. When big money stops buying aggressively, retail emotions take over and sell-offs become faster. Within just 48 hours, more than $1.3 billion worth of long positions were liquidated across exchanges, creating a full wave of panic. Algorithmic trading bots and MEV systems accelerated the downward pressure, doubling the speed of the crash within minutes. And then, on top of everything, the market faced sudden regulatory concerns from the US and Europe, creating additional fear and uncertainty. All of these factors combined together formed a perfect storm. Now let's talk about Bitcoin, because wherever Bitcoin goes, the entire market follows. Bitcoin is currently trading near its 200-day EMA, a level watched closely by institutions and long-term holders. On-chain data gives us a mixed yet very revealing picture. Exchange outflows are rising, which means long-term holders are still accumulating and removing their coins from exchanges. Long-term holder supply itself is near an all-time high. This tells us that those who historically never panic still aren't panicking. Miners, on the other hand, are facing moderate revenue pressure after the halving. And while some selling is happening, it's not at the level where it signals fear. Based on technicals and on-chain signals, the next 10 to 20 days for Bitcoin may still include some volatility. The market could shake out another 5 to 8%. Strong support sits between 55K and 57K, while resistance stands around 63K to 65K. Over the next 3 months, however, ETF inflows are expected to pick up again, and spot demand could rise once macro conditions stabilize. This puts Bitcoin in a target zone of 72K to 78K. Over the next 6 months, if the global economic environment softens, Bitcoin could return to the 80K to 95K zone, and in an optimistic scenario, even challenge 100K again. Moving to Ethereum, ETH usually recovers after Bitcoin, but when it rises, it often rises faster. Right now, Ethereum is facing a few temporary challenges. Gas fees have dropped significantly, which means network revenue is down. But historically, every major Ethereum rally has started after a period of low fees and consolidation. After the approval of ETH ETFs, the initial hype slowed down, leaving behind only true long-term buyers, and that's a positive sign. Meanwhile, Layer 2 networks and liquid staking solutions continue to grow at record speed, forming the foundation for the next Ethereum breakout. Short term, Ethereum may range with support around 2,750 to 2,950 and resistance between 3,350 to 3,600. Over the next 3 months, increasing activity on Layer 2 networks and renewed ETF demand could push Ethereum toward 4,000 to 4,400. In the 6-month horizon, Ethereum has the potential to reach 5,500 to 6,200, and if market sentiment becomes extremely bullish, even 7,000 is not out of the question. Now let's address PEPE, one of the most talked about meme coins of this cycle. PEPE faced the strongest downward pressure during this crash. Liquidity shrank, whales sold aggressively, and leveraged traders were wiped out. Meme coins depend heavily on momentum, and when market fear rises, momentum collapses instantly. Short-term, PEPE may still face another 10 to 15% shakeout. Support sits around 0.00000986, while resistance lies between 0.00001350 and 0.00001400. In the medium term, if Bitcoin reclaims 65K, PEPE can easily bounce 25 to 35%. Over the next 6 months, the meme coin sector could regain hype going into 2025, giving PEPE a chance to challenge its previous highs. Across the market, technical indicators reveal a potential early reversal zone. The Fear and Greed Index is hovering near extreme fear, which historically has always been the best buying opportunity. RSI levels across many altcoins are sitting in oversold territory, signaling that selling pressure is losing strength. MACD is bearish, but the momentum curve is flattening, a sign that downside pressure is slowing. Liquidity maps show nearly $1.2 billion worth of short positions sitting above the current price, which means the market could witness a massive short squeeze at any moment. But despite the opportunities, the risks in the coming weeks cannot be ignored. The Federal Reserve's next statement could shift investor sentiment suddenly. If ETF inflows slow down further, we could see additional pressure. Any regulatory shock from China, the US, or Europe could trigger another wave of fear. A large liquidation event or panic selling from major whales could temporarily drag prices lower. These near-term risks are real, and traders must stay prepared. Looking ahead at the next 6 months, the macro outlook actually becomes more favorable. Global interest rates are expected to soften by mid-2025. Institutional demand for crypto ETFs is likely to rise significantly. The U.S. election cycle historically supports risk on assets. Bitcoin's halving has already reduced supply, and the supply shock will fully reflect itself in the coming months. With major institutions improving custody solutions and increasing adoption, the broader environment supports a strong recovery. If these factors align, Bitcoin could rise to the 90K to 100K range. Ethereum could climb between 6K and 7K. Altcoins may see growth anywhere from 60% to 150% depending on the sector. For crypto holders who bought the dip 2 months ago, the strategy remains simple. Do not panic. Dollar cost averaging is still one of the safest long-term approaches. Reduce your entry price slowly. The next 6 months look strongly bullish, but only for those who remain patient. Fear zones in the market always create the best opportunities. Buy in small portions, avoid overexposure to altcoins, and keep a healthy balance between Bitcoin and Ethereum. Stay away from excessive leverage, monitor RSI reversals, and always keep an eye on Bitcoin dominance. On-chain data continues to support the long-term bullish narrative. Every major dip in history has been one of the strongest buying opportunities, and this period is no different. Friends, market crashes may look terrifying, but history has always shown that the biggest profits come from moments exactly like this. Bitcoin, Ethereum, and PEPE are all showing strong long-term potential despite the short-term chaos. Risks are present, but the opportunities are even greater. The next 6 months will be decisive for crypto holders. So move with strategy, move with patience, and move with confidence. Don't forget to like this video and subscribe to our channel for more informative updates and breaking crypto news.